Hello, we got people coming in. We'll just wait just a minute here for everybody to come in. Thank you for being here. I'm Rochelle Scouten, Development Director at the NBDA. We are so happy to have our first members only webinar and to have Jay Townley here to present for us. So we're just letting everybody come in for a second. Let those people that are maybe a minute late just file in. Perfect. All right. Thank you so much for being here live. If you know anybody who couldn't be here live, we will have the recording up on our website for members later this week. So if you need to duck out early, don't worry about it. We are recording it. And I think without further ado, we can get started here. Thanks so much for being with us, Jay.
Okay, thank you, Rachel. I'm going to kill my individual video. We're going to focus on the presentation, and then when we get to Q&A, I'll bring the video back up. Good day to all of you. My name, as some of you know, is Jay Townley. I've been around the industry for a while, and I'm the resident futurist at Human Powered Solutions. Which I'm not going to explain in detail, but you could take a look at our website, which I will also show the URL when we get to the last slide. Now, I'm going to be presenting predictions for 2021 and 2022. And this is a webinar provided to its members by the National Bicycle Dealers Association as a member benefit. Now, by the way, I will add that Human Powered Solutions is an associate member of the NBDA, and we highly recommend membership across the board to brands, manufacturers, consultancies like ours, and also, more importantly, to specialty bicycle retailers. So please get on the NBDA website and take a look at the membership benefits. Okay. By way of introduction, the content of this webinar is going to be quick and to the point. What we're going to do is highlight the current situation relative to the American bicycle business, not in excruciating detail, but enough so that it helps us with the prediction side. And we're also going to take a look at the key predictions for 2021 and also for 2022 that we believe are of the greatest importance to independent specialty bicycle dealers. And then we're going to follow that with the summary, and we're going to end with a Q&A session. Now, if we do not get to your questions before the webinar ends, I'll do my best to answer all remaining questions by email. You can contact Rachel, and she certainly can send any questions to me. I'll also provide my contact information at the end so that you can ask any questions you think of after the email or the webinar ends. And also, if you want to follow up as things change, because this is a very volatile marketplace, you certainly feel free to do that as well. 2021, current situation. I'm going to try to summarize this and then add some coloring to it. Now, we're at the 55th day of 2021, and there are about 311 days left of this year. Now, going in to this year, NPD and People for Bikes reported, and as covered by Brain, that the U.S. bicycle market increased 56% in 2020 over 2019 and ended the year with total revenue of approximately $9.3 billion, not including used bicycles or used e-bikes. By comparison, the previous year, 2019, was at just $6 billion, a little below that, less used bicycles. So it's the same comparison. However, the 6 billion number was not inclusive of any e-bike retail sales, and NPD and People for Bikes do include them now. So there's a little bit of variable in that number. US imports of bicycles were up 32% in 2020 over 2019, not including e-bikes, because they are tracked separately, as we'll discuss. Wholesale unit inventory of bicycles was and remains less than 1 month on hand. That is no surprise to anybody in the specialty bike retail business. And despite the American bicycle business declaring a bike boom, Bicycle Retailer and Industry News recently reported, and I quote, US unit import of bicycles were not exceptional, close quote. Now, as an analyst and observer, I began to ask how you can have a bike boom when the import of bicycles were not exceptional. Now, there's no question, absolutely no question, that American consumer demand for bicycles and e-bikes was dramatically increased from March of 2020 forward. And most retailers, I'm sure most bike shops on this call, were out of product by summer. And there was a huge backlog of repair work. But a true bike boom, at least based on the 3-year 1972 through 1974 bike boom. Some of you, I'm sure, lived through that or worked through it. I did. I'm just an old guy, but I was active at the Schwinn Bicycle Company during the last bike boom. And a bike boom has to be more than just demand. It also has to have some supply response to be sustainable. Now, let's take a quick look at some of the data that Brain published with the article that I referenced that was published, I believe, February. Now, this is a chart taken from the Brain article and matches the annual US bike unit imports that we've tracked for the same 21 years. And by the way, that's as reported in the NBDA US bicycle market overview reports that are available to members. The reason Brain commented that US unit imports of bicycles were not exceptional is clearly shown in the totals for 2019 and 2020. If you look to the far right, 2020, and this is US Commerce stats, 17.2 million imports, all wheel sizes, less e-bikes. E-bikes are not in these numbers. These are what we'd call human powered bikes without electric assist. Look at 2019. 2019 at 13.1 million units imported, all wheel sizes, direct comparison, and then compare that back to 2020. Now, that whole point about 2019, and there's some reasons for that. The US situation relative to tariffs on Chinese imports of bicycles is part of the reason that's been cited for why 2019 was low. And my point being, if you're doing a comparison in 2020, numbers will look, by percentage in particular, like everything is going up extra astronomically because you start with a very low base in 2019. So if you look over the 2 decades, 2019 was an all-time low. 2020, on the other hand, was somewhere in the median. And if you want to look at averages, the average imports over that 21-year period are about 7.5, 7.6 million. Now let's look at this another way. And this is, again, a chart like this was run by Brain in the same article. It did not reproduce clearly, so I went back and took table 28 that you see here. This is from the, again, US Department of Commerce import stats, but this is the table that we use in the NBDA US Bicycle Market Overview 2019 report. All I did was add 2020, and which is the same thing Brain did. These are exactly the same numbers that you saw in the previous bar chart, except these have been ranked by unit imports. So what table 28 is showing you is a ranked version of that same import data. And if you take a look at 2019 highlighted down at the bottom, it was the worst year out of 21 years for import volume. Part of the reason for that, as I mentioned, were the punitive tariffs. As you all are aware, the previous administration placed a 25% additional, called punitive, or we call it punitive, tariff on top of the regular tariffs. So, to give you a comparison here, a 5.5% ad valorem or 5.5% duty on a regular bicycle was increased by plus 25. So that became 30.5. An 11% bike, which is another category for US imports, again, times plus 25, 36%. Now, through most of 2019, the industry, along with 160 other trade associations and probably 300 or so companies, were asking for exemptions or exceptions to the application of the punitive tariffs. In 2019, there was a conscious effort across the board, both in the mass merchant and the specialty dealer channel, to reduce the number of imports brought into the country so that there was not a higher duty paid, increasing the value of the import held, on the expectation that there would be exemptions. The exemptions, in fact, did happen. They happened for the bulk of 2020, and they were to expire on December 31, 2020, unless the United States Special Trade Rep at that time extended them. And again, there were 160 associations and hundreds of companies in the US that asked that that happen. Now, we'll get to that story because it didn't, but trying to not bring in higher import duty product. And by the way, part of the reason for this is that in 2019, you had about 93% of all bicycles sold in the United States or imported into the United States were imported from mainland China. That number, by the way, was about 87% from mainland China in the year 2020. So the punitive tariffs had an awful lot to do, and the companies importing product not wanting to build up the value of inventory, they reduced imports dramatically to the point where, as you see, 2019 was the lowest that we've seen in a great period of time. So when we look at what happened during the so-called boom, and I don't mean to degrade anybody that says it was a bike boom, it was a heck of a good year. And sales were, bikes were just flying out the door. But to call it a boom, I think, is an exaggeration over and above what we had as a great surge in the sales of product. And what fed that was your inventory. Across the board, the product that went to the consumer to meet that high demand was product in stock. Now, the good news is that take a look at your GMROI, your gross margin return on investment. Look at your KPIs. Talk to the NBDA about what's happening in the P2 groups and what they're reporting. And what you're going to see is that because the surge in sales was fed by the stock that retailers were holding, and of course the wholesale stocks as well, the inventory turns went up. Now, where retailers make money is in inventory turn. They make it a lot of places, but in the specialty bicycle retail business, there has not been on the typical, and that's a statistical term because it's the middle of the middle. But if you take a look at what the NBDA tracked in cost of doing business studies for the better part of a decade and a half, specialty bike retailers did not make a net pre-tax profit on the sale of a new bicycle in at least 15 years. And I was talking to the guy that did that research and also did the reporting on it, Fred Clements, former executive director of the NBDA, last night about that to confirm what the findings were. So you've got a situation here where there was a great surge of retail fed by primarily inventory that was depleted. And that surge has been strong enough that we've not seen the ability of the industry to replenish. Again, you've got less than a month's worth of on hand. Now, e-bikes definitely were a big piece of what occurred in that surge. E-bikes are separate from the numbers I just showed you. And this also is chart A taken from the NBDA US Bicycle Market Overview 2019 report, available to members. You can get, I think it was 100 and pretty close to 100 pages of information and data in this 2019 report, and it's part of a series that the NBDA has been publishing annually. So you've got charts like this where you can go back and look at history. Now, this is e-bikes according to LEVA, L-E-V-A, the Light Electric Vehicle Association, and Ed Benjamin. Ed is, in our opinion, the resident expert on the imports and sales of electric bikes in the United States, has been for a couple of decades. And what this shows is some of the fluctuations from 2009 to 2019. And like the complete bike business, you'll note that there was a decrease. This now is what we showed you previously was import. This is e-bike sales at retail, estimated. But you'll see that 2019 was down from 2018. And on the left, you'll see the scale. So we're talking a high of about 300,000 units in the United States sold, e-bikes sold at retail, a decline close to 260, 270 in 2019, but the trend line was aggressive and extremely promising, heading toward 400,000. Ed is still working on the import data because it does not come in under the same harmonized tariff schedules, not humanized, harmonized, the HTS numbers as complete bikes. And when I talked to him, I emailed him about this, he said that there's been such an increase in direct-to-consumer sales of e-bikes that the number of importers has more than doubled. So it's taking him much, much longer to compile the data at this point from the import data available. So my point here is that, yeah, there was a great surge in e-bikes, but to put it in perspective, the numbers we're going to see, while they'll be good and they'll be aggressive, added to the regular bike numbers, are still not going to be in the millions as they are in Europe. We're going to see probably something above the 400,000 level, but I don't know until I get the information from Ed. Meanwhile, I do agree and think that e-bikes are going to be one of the key categories of growth and will continue as a key growth category as we come out of the pandemic and move into 2022 to 2023 and beyond. I also think you're going to see, in our group is predicting, that electric assist will become an integral component option of bike lines going forward. So a consumer will come in and the bike shop will show them a line of bikes, and at the top of that line will be the version of the product that has an electric assist of some type. So we do see that growing and becoming just a part of the bicycle business going forward. So let's round out and finish the current situation, because I've prattled on about stats, which I love anyway, for probably long enough from your standpoint. The IBD lead time is pushing 10 to 12 months at this point, and you guys can certainly give me some feedback on what you see currently, but that's what we're getting. Price increases are rippling through the IBD channel of trade, and we'll comment on that for the future as well. The 25% punitive tariffs on Chinese imports on bicycles, e-bikes, and components and parts went back into full force and effect, as we said, December 31, 2020, because the previous administration did not extend the exceptions that were in place. Container shortages, if you've been reading about this, delays at ports, freight cost increases are all hitting the supply chain, are part and parcel of the price increase issue. The latest shortage is corrugated and price increases for shipping cartons. Bike shops are experiencing a tightening of terms and order restrictions. I'm sure you're not happy about that, but you're certainly seeing them in the marketplace. The shortages are being projected out now 12 to 18 months. So with the further projection that there will be no on-demand wholesale inventory until 2022. And a final comment that didn't get into the slides, but one that we think is important. IBD inventory turn and GMROI have increased. And while an increase in inventory turn when you can't get a lot of inventory and inventory is in short supply may not be something you look at. You may not think it's that important, but I think it's huge. Because remember, the middle of the middle as measured for 15 years by the NBDA, the typical bike shop in the United States did not make a net pre-tax profit on the sale of a new bicycle in about 15 years. Now that all changed during this surge, during what's being called the bike boom, because that boom was fed in great part by the inventory that you had paid for that was held. And in turn, you turned it into a retail sale. And as more of that product went out and more of the product you ordered when you could get it went immediately out for retail sales, your gross margin return on investment increased. I think it would be interesting to hear if the NBDA P2 groups could report on that at some point and give us an idea of how it has changed, because I think it's a key point relative to the future from the standpoint of how IBDs will prosper as we get beyond this year. Speaking of which, let's look at key predictions going forward. 2021, deja vu. Do any of you remember Yogi Berra? I talked about this with the same issue and screwed it up because I said Yogi Berra went on to become, he's a former Dodger from the original Dodgers in Brooklyn. He was a catcher. And Yogi was prone to very interesting comments like deja vu all over again. And I made the mistake the last time around of saying Yogi Berra became the manager of the Dodgers in Las Vegas, which is not true. He became a manager of the Dodgers in Los Angeles when they moved out west. Anyway, deja vu. If vaccines don't prevent transmission, and that's looking better and better every day, but still, as we look at the rollout of the vaccines, and if they do not prevent transmission, or if we don't get the rollout as fast as we'd like to see it, I think the latest numbers are about 6% of the population has been vaccinated at this point. 2021 is going to look a lot like 2020 for the IBDs. So until we see more vaccination, till we see if the vaccines are in fact going to prevent transmission, you're going to have to deal with a continuation of social distancing, limiting the number of customers in a store, wearing masks and wearing gloves, all smart things to do. And you're going to have to be patient. Ask your staff to be patient. You're going to have to be smart for the bulk of the year. Now, even if there's news tomorrow that the vaccines prevent transmission, you still need to make sure that you still need to get the bulk of the population vaccinated. So retail, including specialty bike shops, are going to see a 2021 that's very much like 2020 from the standpoint of what consumers can and can't do. Now, and also retailers. But that crisis accelerated retail omni-channel, something that dealers can certainly take advantage of. Pure plays, depending on how the specialty bike retailers position in the market relative to their websites, home delivery and service, which you can certainly take advantage of and participate in. And all of these accelerated retail phenomenon were all forecast to begin to get traction, take pieces of the market 5-6 years from now. They've all become reality in less than a year. And they also, many of them appear to be permanent. Supply chains, they're going to continue to be challenged in 2021. And they're going to start to rebalance with a key question in the bicycle business at all levels being, where should brands make products? Where should brands make products? There will be, however, in 2021, no increase in on-demand inventory. we can expect at least one more round of price increases and further tightening of terms. And I say expect at least one more. At the way freight costs, ocean container cost prices, back when we started in a year, February of 2020, going back into 2019, the cost of a 40-foot container from Asia was in the range of $1,800 to $1,900. Right now, that's pushing $5,000 in some cases. If you don't have a freight contract, is $6,000 per container. So the freight increases are very real. You might have read where these new big container ships now are running into weather-driven phenomenon in the oceans, higher wave actions that in turn are tossing containers off the ships. Container loads are being lost to high seas, which is, of course, a major issue. But all of this is going to contribute to the price increase issues, and we're saying at least one more of them this year. And please, there may be more, so don't get mad if there's more than one price increase. Here's something significant for you to ponder. Green is the color of recovery. For the bicycle business, particularly the growth of the e-bike side, green, the environmental issues, become the color of recovery. And that brings with it both responsibilities and additional changes that need to be made, some of which we'll touch on, but also the fact that there is an opportunity here in the environmental concerns of the consumer that can be translated into advantages for specialty retailers across the board. Weather. Weather and the climate crisis will play a growing role in both demand patterns and logistics and the supply chain. I mentioned the issues of losing containers. You guys all looked at, and some of you may be from the states that were affected, the major winter storm that has abated but dominated the country over the last 10 days or more. We all read about Texas. I hope those of you, if you're in Texas, are doing well at this point. But this is unprecedented. This weather phenomenon that we just went through in the last 10 to 14 days is unprecedented. It's never happened in this country before. This will give you an idea of the disruption. This weather pattern, I live in Wisconsin and work in Wisconsin. I was talking to Rachel, she's out in California. But you could see here that this V-shaped pattern of cold weather didn't make for a lot of good cycling in a lot of places where people were used to cycling this time of year. It impacted the market. Retail sales that slowed in the east because of the weather resulted in product being shipped cross country and dealers in California getting bicycles that were originally delivered in eastern states. So the weather patterns, as the climate crisis grows, it's going to affect weather, and the weather patterns are going to affect the supply chain in the United States for bicycles and e-bike products. And retailers are going to have to begin to work with suppliers relative to how you respond to this particular situation. I said to one of my colleagues the other day, and oh yes, we're going into the hurricane season after this. So weather is going to have to be looked at constantly, and it's going to be part of how this industry works together to react, and how retailers and the NBDA is working with retailers to be able to respond to the weather phenomenons and the unprecedented weather phenomenon that impact bicycle sales and the bicycle supply chains as we go forward. Now, 2022. We've bundled 2021 and 2022 predictions because the next 18 months are going to blend. And the seasonality that we've associated with the bicycle business has been disrupted through the global supply chain, serving the American bicycle market and business. Now, it's, from our standpoint, leading us to our key predictions for 2022. The COVID-19 crisis will finally be brought under control to the point that America and the world will open up, and industry and commerce will be able to function without social distancing and masks. And this is huge. I think you were aware that travel to Taiwan in the bike industry had become commonplace, from Taiwan to China. Product managers at all levels of the business, the top brands, the mid brands, even the low end brands, would get on a plane, go to Taipei Bike Week, go to the Chinese shows, and travel the Orient. I just emailed back and forth with Bob Markovicius, who had done seminars for the NBDA, executive vice president of Specialized, well known in the industry. And Bob just went through the quarantine process in Taiwan to get back into the Orient. I know he wanted to travel. By the way, I'm going to apologize that I mentioned to Rachel, I've got a house full of rescue animals, and once in a while my dogs will bark at something, and we'll just let that happen. I'll apologize for it, but if you hear a dog barking in the background, it's one of my guys. So Bob just went through 14 days of quarantine in a 35 square meter room. And he tells an interesting story, what it takes for an individual that wants to get back into calling on suppliers face to face in countries like Taiwan. And he tells me that mainland China is even worse, even harder. This is not the same industry as it was in 2019, nor up to February of 2020. So the COVID crisis being under control is going to make a huge difference in the business. And I don't know if everybody's going to go back to travel, but we're going to see a mixed economic recovery. Now, if you follow what the Fed's been saying or what's going on in the economic world, it is going to be a mixed economic recovery for many reasons. With, as I said before, pandemic-induced changes in consumer shopping behavior. So bike shops will have to embrace the changes to satisfy their consumers. And bike shops are going to have to be responsive to regional economic and social needs. The point being, bike shops are going to have to pay very close attention to what these pandemic-induced changes are, and like the rest of retail, react to them in order to satisfy the consumer. Supply chains will accelerate rebalancing and shifting. Now, exactly what that means, we can get into excruciating detail, but nobody knows for sure, because not a lot of changes have been possible up to this point. As I said, the 2020 import units, while they were up, also 87% of them came from mainland China, where punitive tariffs had been in effect in 2019 and went back into effect in the end of the year and for the first of the year in 2020. Now, here's the piece that we're finally going to come out and say, the bubble's going to pop. The bubble's going to pop. On-demand inventory is going to build. Price wars will drive wholesale and retail markets. Terms and restrictions will melt away, and IBDs have an opportunity to maintain higher inventory turnover and profitable GMROI. How? By not taking in the inventory that the brands, the wholesalers would like you to take when this bubble pops and on-demand inventory begins to build. We can discuss that in more detail, but this is going to be a key point, I think, relative to the key indicators, the work that the P2 groups through the NBDA can do in establishing for the IBD channel of trade what should be the future after the COVID is under control. And that is how IBDs take advantage of profitable GMROI. Sustainability is now part of the cost of entry, starting with packaging. And you've already seen reaction of some of the big brands to getting plastics and styrofoam out of bicycle packaging for any products in the business. That is going to be accelerated in the market for many reasons. So that sustainability as a part of your business going forward is now going to become part of the cost of entry. Consumers are going to expect it of you. And the market, the American bicycle market, is going to find a new net gain. Because the bubble pops, I don't think it's going to go back to what it was or less. When the bubble pops, the market is going to find a new level of net gain between 2018 and 2021. Now, to put that into numbers, that's going to be somewhere between 17.4 to 17.9 million bicycles, based on the numbers that I showed you earlier, and 500 to 600,000 e-bikes, with an acceleration in the e-bike portion of the market. Look for e-bikes to be a great growth area. So in summary, we've outlined the current situation and laid out our key predictions for 2021 and 2022 that we hope will help bike shops plan for the coming 18 to 20 months. By the way, you're going to have to renew your planning more frequently because of the turmoil and changes in the marketplace. 2021 will be a lot like 2020 as the country struggles to get the COVID crisis under control, and retail sales will remain strong, but the supply chain will not increase the availability of on-demand inventory as prices rise through 2021. The climate crisis, sustainability, and environmental responsibility will become increasingly influential and important in the bicycle business as green becomes the color of recovery and weather plays a growing role in everything. 2022 will see COVID under control and America opening up to a new reality with mixed economic recovery, pandemic-induced changes in shopping behavior, supply chain rebalancing, and the demand bubble popping as on-demand inventory builds. Price wars are going to drive the bicycle market and business, and IBDs have a Gimroy opportunity. And lastly, sustainability by 2022 will be part of the cost of entry as the American bicycle and e-bike market finds a new net gain level. So this leads us to questions, and I've asked Rachel to read the questions that you've sent in so that we'll hopefully get through the questions quicker. As we start the questions, I'm going to put up a slide that shows our URL, and we'll point out that it's got my executive director and partner Brad Hughes's email, but mine is Jay at humanpoweredsolutions.com. And please feel free to email with any questions that either we don't get to or that are not answered in the Q&A session. So, Rachel, what do you got?
We need a few questions to come in here. There's a few chats, but I don't see any questions so far. There's a comment. Oh, here we go. Do your predictions take into account likely shifts in strategy on the part of manufacturers and bike brands? Why
Yes.
would they be pushing to limit their own on-demand inventory?
Yes, we're taking into account their strategies. You'll have to ask them that question. We don't see much change in the brand. Again, there are different companies, but overall, in particularly the mid to upper side of the supply chain, we do not see a lot of strategic shifts or thinking about the changing the strategies. Now they might, and they very well could, but yes, we're taking into account what we think will be the mindset based on what we've seen up to this point. In other words, we don't see the suppliers changing. We think the dealers, if they want to take advantage of this, are going to have to change. I might add, I'm sorry to interrupt, as I think about it, that also goes to the point that we haven't seen a lot of change in the supply chain as well. And so the supply chain is going to dictate a piece of this through the brands to the dealer. And until the supply chain actually can be changed, the supplier is going to have difficulty changing as well. So I apologize.
No, please don't. What will the ideal bike turns be when things settle out in 2022?
Bike terms?
Turns.
Oh, turns, 6 or more. If you take a look at, I don't know what the P2s are saying at this point, Rachel, but if you go back to Harley Phillips, former president of the NBDA, and what he taught before he retired, he was looking at 5 to 6 turns the typical that the cost of doing business uncovered over time when the NBDA was doing those. And by the way, the NBDA didn't stop them. The companies that were doing them for the NBDA quit doing cost of doing business because that's a very difficult survey to take. But the turns that we saw in the numbers were 2.5 or lower. And so that's the typical. And the dealers that were making really good money in the bike industry were able to achieve 6 or more.
Do you expect tariffs to remain at 25%?
I guess the short answer is yes. This is 25% is on Chinese sourced products. And by the way, that list, the 301 punitives are on a huge list of consumer products. It's not just bikes or bike components. The current administration is still going through getting its people in place. The USTR candidate has had hearings, but she's not in place yet. The Commerce Secretary is not in place yet. But the administration at this point has indicated that it's not going to make any quick changes in the previous administration's tariff rates. So it's going to be a while.
All right. When does the new Euro factories start to come online, and how much Asia production will that free up for us?
I'm assuming you're talking about the new factories in Europe.
Yes.
Probably at this point, a marginal amount. The brands in the United States and the supply chains for new bicycles in the US are not drawing from the Euro plants in any great numbers. Take a look at what Brain publishes for import data, and you'll get an idea what the impact is on bicycles. That Euro plant that I'm aware of that's being built is all e-bikes. By the way, it's the hype is it's I think the largest plant in Europe, and I'm not sure if that's true. It certainly is not large by Asian standards if you compare it to Giant or Merida plants, export plants. But we don't see. We don't see Europe being a factor, even with increased capacity, partly because the European market still is doing about 45 to 48% of its annual unit sales in bicycles and e-bikes from domestic production. And imports, particularly from China, are heavily tariffed and restricted. So the Taiwanese started this when the Europeans became protective from a tariff standpoint 20 years ago. Companies like Giant, Merida, Ideal all put plants in Asia, put plants in country in the EU. And the latest places where you'll see the Taiwanese component manufacturers and also the bike manufacturers investing are Poland and Portugal. But the investments that are being made are for in-country consumption or in EU consumption. And we're not seeing much of that come over to the States at this point. So the US supply chain is still tied to the right now to the Asian production.
All right. Why are used bikes not in the equations?
I don't know.
There's a comment here. 85% of our 2020 sales were used, many of them the very early and late 70s boom bikes you mentioned. Doesn't everyone ride a used bike?
I do. Yeah, I started to harp on this. And if you look at the NBDA US market reports, we started to report used bicycles as a part of the market going back to 2014. And I don't know why. I've urged the industry to do that. We right now look at it as somewhere between 1.6 to 2.5 billion. Pro's Closet is probably the best example of the high-end used business. Now that's direct consumer, but like that, the comment made with the question, many bike shops have over the years done well with previously owned bicycles and the used bike business. And it certainly is an important part of how dealers can respond to the shortage right now. But I don't know. I think it should be, because it's, in round numbers, it's $2 billion worth of revenue through the business overall, and most of that through the shop trade, that is not clocked in or made a part of what our annual volumes are. I think it should be.
Can we expect general suppliers like JBI to adjust to the demand of electric bicycle parts? Like a
Yes.
simple derailleur guard able to go on a fat rear hub motor axle? Not to speak about belts, electric cables, batteries, recycling,
Yeah,
etc.
well, we get in the weeds when we get to cycle to guards and so on. But yeah, I think the answer to that is yes. The American business is going to be slower than the European business. I mean, Cycle Europe today, one of the headlines is that they, I think, expect the German market to be over 1 million e-bikes this coming season. It's going to, from the 2022 period, when it really stabilizes and we see what the true market is, I think it's going to take off from a base of, in round numbers, 400 to 500,000 units. It's going to drive up into the millions very quickly. And it's going to do that based on people like e-bikes, but also bike shops have to be very aware that they're going to have to respond to what the consumer changes are in buying habit and behavior, because one of the growth areas right now in e-bikes has been the D2Cs, the direct to consumer. I think shops can capture most of that and bring that business in. So I do think that everybody, every distributor, every brand in the mix is going to move toward E. And over the next 5 years, we're going to see, as I said, the e-bike will become an option. Every bicycle, you've already seen it up through Pinarello. The last couple of years, Pinarello has had human powered bikes, and then the same model, if you want it with a really neat looking down tube housed battery drive system combination. And the Italians, Pinarello, is running some great commercials relative to why that's great, because then the old guys can beat the young guys. Just a comment on age.
All right. Many vendors are pushing us to take containers of bikes for 2022. What effect will this have on supply? And do you think it's a good business move if a bubble is inevitable?
Right now, take what you can get, but I would sit down and do the planning. The bubble's going to be hard to predict. And I think the biggest problem of taking the containers at the prices you're going to have to pay today will be the impact the bubble, as I call it, is going to have on pricing going forward when supply catches up to demand. I mean, you've been in the bike business long enough to know what that means. In times of shortage, your price goes up, but you could charge a higher price to the consumer. And we've got prices, higher prices, because freight's gone up. Everything around us is going up, and that's all clocking into the price of goods and being pushed through to the consumer. When demand or when supply catches up to demand, and at the same time the consumer gets tired of some of those price increases, you're going to have to deal with the value of what you paid to get goods at a point where the values may come down. That, I think, is the bigger risk. I don't think you're going to get stuck with much unless you've completely overbought, but I'd be very, very mindful of the end of this year. I'd watch very carefully how the economy is responding, how the COVID is being brought under control, and that'll be a point where you're going to see this shift in consumers and the consumer buying. And when we move toward what some folks are going to call the new normal, is when I see that bubble beginning to collapse. And again, this is a bubble based on the fact that there is no inventory now, on-demand inventory against a demand. And even if that demand is the same, but that supply is up, you're able to supply the demand more quickly and also more completely. So if that's not confusing enough for you, I think the simple thing or simple answer is, yeah, get the stuff you can get today. You're going to need it. As you get beyond the half or the third quarter, begin to look carefully at what you see in the economy and the COVID control, and watch for the bubble, which you'll see. You'll sense it. You'll know where it's out there because you'll see the reaction to the supplier and their pricing and terms. And then you should be more mindful of not paying a higher price for a product that may drop in price as we get into the adjustment in the market.
Next, do the major US bike companies own their own factories in Asia, or do they bid production between other bike brands?
Mostly bid it. The companies in the bike business, the brands in the American bike business have had alliances that have shifted and changed. And that started in 2019. And an example is you heard we're going from China to Vietnam or China to Cambodia. That was problematical. Certainly it was accomplished to an extent. Some of it even went to the Philippines, which did not work out well, I understand. But still, it backs up for a number of reasons. The move to outside of mainland China is still dependent upon components, and it's still dependent upon middle managers that know how to make bikes. But overall, the American companies don't own production in Asia. Now, one of the major brands, Trek, does own plants in Europe. The Villager plants, I believe, they own in Switzerland and Germany. So far, that's been in-country production. A little of that's come to the U.S., but very little. Most of it is consumed, I believe. I mean, the people at Trek can correct me, but their investment has been in plants for the European market. There was on the radar a Trek plant in Asia, but there's not much been heard of that recently. And their alliance had been with Giant. And then more recently, they've allied with brands in Vietnam and Cambodia, as has Specialized. Specialized was working with Merida. They probably both still are with those brands, but Specialized has also started to buy from Cambodian sources. But those Vietnamese, Cambodian, the new sources in Asia are still dependent upon supply and people from mainland China or from Taiwan. And that's where the problem has been in getting enough people there, but now also the capacity of the component plants to be able to supply all of the manufacturing plants, all the OEMs. So the supply side, the supply chains have not benefited from any of those moves, at least yet.
It seems there are more and more fly-by-night online direct-to-consumer e-bike retailers in operation. Do you have any insights on what share of the e-bike market exists in the direct-to-consumer versus brick-and-mortar channels? Do you anticipate more of these non-traditional online players, or will there be attrition as to some win and others lose?
Okay, well, let me take the front end of that and the back end. Yes, that is absolutely correct. That's what Ed Benjamin's finding. In the increase in the number, and I don't think I'm telling this out of school, but in the increase in the number of transactions by a D2C, a direct seller in China to a consumer in the United States of an e-bike has increased to the point where last year, I think Ed said there were about 180 suppliers of record, most from China, retailers in the US or consumers in the US. So it was the combination. That's more than doubled. He's found over 260, I think 280. And so it's taken a long time to count them. So yeah, I'm aware. And our company, my partners are very aware of the, and fly by night. I mean, it's a derogatory term that is probably applicable because I really worry about $185 or $200 e-bike, even though it may be a low-end hub. And I'm more worried about the battery, as my partners are, and the fact that they don't have integrated systems. So what will happen? I think you're going to see as the demand begins to ebb, and you settle in to reliable sources like a bike shop for an e-bike product that is a good quality brand with good quality componentry at a reasonable price or a value for that. I think you're going to see some of these Amazon sellers or Shopify sellers direct to the consumer go away. My fear is that they will go away, leaving a prejudice based on product liability and or product damage, primarily because of incompatible e-bike systems and bad lithium batteries. I think you all know the end result of a bad lithium battery.
All right. Are you seeing a possible trend for dealers using the boom to retire and walk away, leading to a loss in the overall dealer base?
God bless you if you can do that. I don't see an overall trend. What I see, and I talked to Rick Vosper and our partner, the Data Wizard. He's not our partner, but our source, the Data Wizard, is dealers that have been in the business for 50, 60 years, getting to the point where, yeah, this was a good year. They made money. If they own their retail store, if they own the real estate, they're at a point where they can either sell a viable business at a good price, or can walk away from it. So I think that's maybe accelerated a bit. The let's get out of the business while it's good. And on the other side of that is some of the older dealers that simply have not changed and responded, can't really deal with the current demand, and are getting out while they can. So there's a big chunk that are continuing through and figuring out. Some are making really good money because of the Gimroy increase. And also, as the previous question, where there's high percentages of used bikes being sold at good prices at profitable margins. So I think that that, and then the combination of, and I can't remember the exact data, but there have been more small businesses started in the United States during the COVID in 2020 than at any other time in the history of the country. Some of that has been in the bicycle business. We see this in our consulting practice. There are people that bump off of us that have looked at the business. They've heard about the boom. They've read about what the New York Times and the Wall Street Journal are saying about bicycles and bicycle sales. It's a good business to get into. And they're trying to figure out, a lot of them are looking at D2C, direct to consumer. What they're bumping into is the wall of the supply chain, how to get product to dealing with that business. Some are smart enough to work around it. There's a couple of ways to deal with it, but most of them aren't. I do think there's going to be some new shops. There's going to be some new mobile service people. But to answer that question directly, no, I don't see a huge impact on the folks that are ready to retire, and it's been a great year, and that's been a build up. I don't see that as a source of depletion of the number of bike shops. Probably didn't answer that as directly as I could, but there you
go. We are at the top of the hour here. Do you want to answer one or two more? And then we can answer the rest by email.
Sure. Why don't we take one more, Rachel? But let me put up, assuming I can get it to go here, our contact screen. There we are. Why don't we just let that sit, answer one more, and then I'll answer the rest. You can send them to me and I'll answer the rest by email.
Perfect. All right. So the last one we'll take is, can an argument be made that bike sales in 2021 may actually be softer than 2020?
Good question. I don't think, well, first of all, I think there's a small chance you can make that argument. I think it's a diminishing small chance because of what we're seeing up front relative to the overall reaction of both the new administration and the Congress to stimulus market, and the support for that stimulus from the Secretary of Treasury and the Chairman of the Fed. The worry is twofold, obviously. One is the new Secretary of the Treasury and the Fed chair both are talking unemployment in the 10% range, because they're picking up the unemployment number, which is about 6 or 7, plus the people that have left the workforce to get us to 10. The concern is that the stimulus is not going to bring down the unemployment by the time we get to the end of the year, impacting the economy. The other is certainly that the economy will slow rather than be stimulated into growth. The chances of that occurring are diminishing to the point where I think there's only that slim possibility that that scenario is viable. That is that the case that this year would be a lower year in retail sales of bicycles and e-bikes than the previous year. But a case for it being equal to or only slightly above last year, I think is more probable. And then of course there's it's going to be a better year, which is still out there. But I think the likely scenario is it won't be any worse. It may be slightly better.
Perfect. Well, that's all we have time for. Again, thank you everybody for being here with us. Big thank you to Jay Townley for presenting for us. And if you have questions, the email is on the screen. Email him, email us, we'll forward it on. And we'll see you on the next one. Thanks, everyone.
Thank you very much, Rachel. Thanks to the NBDA, and thanks for all of you staying with us.